guys. Alus FX. Okay, guys, so this is gold. So we're gonna start analyzing gold from a daily time frame. Okay, as you can see, guys, we would see from a daily time frame, this thing has been bullish. We have been going up. If you can remember what we've just checked on Bitcoin right now, it's something that looks more similar than this one to say, okay, this can be the continuation pattern. Which is something which looked more something like this, of which it's what is a continuation pattern, impulsive, and then this channel, and then continuation, something that looks like this from a Bitcoin thingy. So that is why I took a buy from that Bitcoin, or I feel like Bitcoin is still gonna go up. So on this gold right now, the something that we can say this was the lowest point where the market gave us an impulsive and created this high right here, and then the market went all the way down to create a low. So let's just use this low. I know we can use this one, but let's just use this low because it makes our life simple. Impulsive correction, and then the market is currently in an impulsive. So remember, now I said in the market will forever have the main structure and the substructure. So if we were to concentrate, if we were only to concentrate in the market structure, to say we are only trading in the main structure, we do not use the substructure to trade, therefore, which means we were still going to be waiting for the impulsive correction, impulsive. So which means that the next trade that we were going to take on gold, it was only going to when the market comes back to this point right here to say we are in an impulsive move. So in the few days to come, you might see gold coming down. In few days to come, you might see gold coming down like this. Do not think now that gold is now going down, is crashing. It is going to be in the correction of what? It is going to be in a correction of this impulsive, because remember, the market is still in an impulsive phase. We are still forming the new impulsive phase. We are still forming the impulsive towards the upside. So one day when you start seeing gold doing something like this going down, do not think that the gold it's going down. It will be in a correction of this last move or of this last impulsive. It is still going to be shooting going towards the upside. So we always have to treat the market based on the current structure that it's on. So this is what is going to happen in the long run. I promise you, people they're still going to make mistake. I know that when this gold starting to come down, they'll be like, now this thing is gonna go all the way down to this point. It will never get to this point until the market does what? The only point the market will be coming all the way to that point, it's when the market gives you this charge and then fail to break above the next previous high. Then that's when we're gonna say the market is gonna go down, because we would have what? Impulsive correction, and then the impulsive move which failed to break above, and then that's when it's gonna be going towards the downside. But for now, even if the gold is coming down, it is still in a bullish structure to say this is just a correction and an impulsive. Enough with that. So now we're going to be going to where we're just going to remember I said impulsive correction. So this is going to be our impulsive phase. So we're just going to concentrate on the impulsive phase only. That's what we're going to concentrate on right now. So this impulsive, remember, when the market is in an impulsive phase, all you do, you just have to go look for what? For continuation patterns. That's all you need to do. That's it. So the market went from all this point, created this high. So it created this high, and then it created the what? Its correction. So this was an impulsive correction, and then this impulsive created as this small. The moment, remember, when the market still created the highs, and then it needs to create its low. So this was the impulsive, and then it corrected. I don't know if this thing is too small for you guys to see, but I hope you can see that. So we have this impulsive correction phase, impulsive phase, correction phase, and then currently the market it's in an impulsive phase. Remember, do not forget that this whole thing at the after order it's an impulsive phase, but you still have these substructures: impulsive correction, impulsive correction, impulsive correction, jalo njalo. Yabo. So now what I want us to say, I want us to clear some of the information because I don't want us to have so many lines that we end up being confused. So this is the last impulsive phase that we had. So that was our last impulsive phase that we had. So we're going to go to 4 hour time frame. So this was the last impulsive phase that the market was in. So in this impulsive phase, so remember the last high was this one. So the last high was this one. So in your mind, you should know Uguti, when the market breaks above this high, therefore we are going up. Therefore, we are definitely going up. That is a determining factor. Like for example, if I were to throw you a clean chart, impulsive correction, impulsive correction. So the moment the market breaks above the previous high, creating a high, do not think about selling opportunities. The moment the market creates a high, think of just when the market is going to give you a pullback to retest that one and go up. Think of that at all times. Do not think of selling opportunities the moment the market breaks above the previous high. The moment it breaks above your previous high, think of retest. Breaks above, think of retest. Until it does what? Until it fails to break above this and then it breaks below and then it breaks the what? The strongest one point. Therefore, now we are talking about what? A different scenario. We're going to be talking about a different thing because the market would have changed what? The direction, like in this case right now. The market creates the high, a low, a high, a low, a high, a low. So what happened? Let's just say the market was still here. Let's just say this part of the graph was not here as yet. Let's just say this part of the graph was not here as yet. Would you be thinking of selling opportunities? No, you can't be thinking of selling opportunities because you see this thing is going down. The only time you would think of selling opportunities is when the market breaks below this point right here. I don't know if you guys are getting me because we have this high, this low. The market breaks above this, creates this high. Therefore, the only thing should be thinking about a retest of the what of the previous high. The market went all the way up, created this high, broke above this. So the only thing that you should be thinking about is the retest of this previous high, the retest of this previous high. But now the market did not retest there directly. It went all the way down. But did it go all the way down and break below this point right here? No, it did not break below this point. Therefore, we are still in an uptrend motion of this graph. Hence, you can see it bounced here and then it's still pushed up. At the moment now, you can see the market still broke above this high. The market still broke above this high. So the only thing you should be thinking about right now that should be in your mind is what? It's a retest of this point before the market goes up. You can't be thinking of selling gold to say it's gonna go all the way down. Icon. Not like that. There you are definitely making a mistake. That's what I can say to you. You are making a mistake. When the market breaks above this one, all you need to think about retest and go up. So now the only thing that you should be thinking about right now on gold is a retest. Do not think of anything other than retest. So hence I'm saying gold, we are waiting for the retest. As you can see, this is just a simple clear thing that you need to do. Hence they say in forex trading, you need to be patient. You need to know when to wait. You're gonna wait until where. So here we can see the market is still pushing up, but the more you go to the lower time frame, you can still make use of this impulsive move. You can still find some certain continuation patterns. But now, okay, let's go down. Let's just, for argument, maybe for explanation purposes, let's carry on to go down. Let's go to 30 minutes. Let's just carry on to go down. So now this is a what? This is another structure. So let's just say the market on a 30 minutes time frame of gold, it gave us impulsive correction. And then it gave us what? Impulsive correction. So if the market can break above this point right here, if the market can break above this point right here, let's remove this so that we can clearly see. So this is a previous high. It's like this. So if gold can break above this point right here, therefore the next time we are going to be looking for what? We are going to be looking for the retest of this high. and then the market is still going to be going down until the market comes down, breaks below this lowest point, that is whichever it would have created by that time, and then you would know what now we are going down. But going down to where? We are going down to this point right here, because don't look at this time frame and forget about the 2 hour time frame, because the 2 hour time frame, remember, we still said that the market broke above this high. So we still need to respect this structure. We still need to respect this structure. We can't just say, oh, now the market broke below this point. Now we are selling all the way to what the times are. No, you do not forget about the higher time frame structure of that particular time frame. That particular time frame has also got its own structure, which is the previous high was broken. Therefore, we still need to respect what we still need to respect this. Either the market is going to fail to break below this, and then if it breaks below this, therefore we know that we are going down. I hope that makes sense. I hope I'm not confusing anyone. But do not forget about each and every time frame that you go through. Okay, so at the moment, if you can go to 15 minutes time frame of gold, let's see. If you go to 15 minutes time frame of gold, you're gonna be like, okay, we still, this is the high that we still created so far. Impulsive correction. So this was the previous high that we were talking about right now. That if the market decides to break above this point right here, therefore we know for sure ukuthi kwenzakalani. So hence I'm saying mina I have got like two kinds of entries. Yabo. I would have a risk entry when the market have given me a strong candle closing above this. A risk entry number one, when the candle close above this and say I'm gonna buy, and then it's gonna go all the way, it's gonna buy all the way up. Or I am going to wait for the market to come, retest this high, and then I buy again to go all the way up. But most of the time the market doesn't really respect, because like this one, you've got this high right here and then a correction, and sometimes the market doesn't really come directly to retest the actual previous high before it goes down. Some people, they use this small retest. I don't usually use this small retest. I want a solid high, solid. I want a solid retest when the market goes up. When the market goes up, and then come give me a solid retest and then go all the way up. That's what I want. That's why most of the time I enter on the breakout. Like in this case right now, I would have entered on this breakout. You see this candle, this bullish strong candle, I would have entered exactly on that candle to say I would rather add position when the market comes back to retest this high. But in this case, you can see it didn't come back. It just flew and go. Even in this case, since I'm saying like if it breaks above this, and then I'm just gonna take it and go. Hence, you can see Nagu Euro USD. My advice was like, do what when the market breaks above this under 15 minutes, when I said when the market gives you a strong candle breaking above this previous high, enter and go with it. If it comes for retest, then you're gonna add position, or you're gonna just wait and not panic, because it's still gonna go up. Because it's really tricky sometimes to analyze a chart, and then you can see with, okay, this thing it's a buy, and then you are so sure, but the following thing it did not give you the retest, and then it went all your direction. It makes you sometimes think of taking wrong decisions, like you enter before the confirmation, you enter before retest and everything. So that's what I use. That's my strategy that I use to try to avoid to take the pain, because it's painful to predict right, but you couldn't enter. It's very painful, I know it. So if I can have a strong candle closing above this, I'm going to take a buy, aim for that 1:2 or 1:3, and then I'm just going to wait. Sometimes it doesn't come back like this one. It just broke, boom, it went. It did not come back and retest. So to avoid such things, because next time such things, they will make you make wrong decisions. So gold, guys, it's like that. I feel like it's still gonna go up, still gonna push, still it's gonna push, but that is confirmed if the market is going to close. If the market is going to give us a strong another candle that is gonna close above that. You see, therefore, which means we are still going up, which means gold is still bullish. So I hope I've explained gold um to the best of my ability, guys. I think I've explained gold to the best of my ability. I'm gonna stop this.